This episode of Unqualified Opinions is brought to you by Hirechain. Your next hire could come from anywhere: a recruiter, a job board, a referral network, or a conference. Hirechain manages hundreds of candidate sources for you, so you only see relevant applications and can focus on picking the best person for your team. On average, our customers fill open roles faster and 30% cheaper than with traditional recruiters. Leading companies like The Graph and Messari already use Hirechain. So get your time back. Talk to Hirechain today and hire the best, fast. Visit hirechain.io/Messari for prioritized onboarding. This podcast is meant for informational purposes only and is not meant to serve as investment advice. Hosts and guests may hold cryptocurrencies discussed in this episode. Opinions expressed may not reflect the opinions of Messari.
Trading volume down 30% from last quarter. Transaction revenue down 29%. Net revenue down 14%. For the past year, my estimates of Coinbase's revenue have consistently been far more accurate than Wall Street's. Those are my estimates for this quarter, and on the surface, they don't paint a nice picture. But in the detail, I see a business that is methodically becoming more economically diverse, resilient, and better positioned for the future, despite what headlines may suggest. Coinbase's next earnings call isn't expected for 2 weeks or so, but we can already have a good idea of what they're going to say. And I can give you a bit of a look into how I know. I'm Kunal Goel, and here's the story.
Messari's annual conference Mainnet returns this fall, September 30th through October 2nd. Now in its fourth year, Mainnet is the largest annual crypto event in New York, featuring leaders from crypto, Wall Street, and Washington. Join 3,000 attendees this year to hear from leaders like Kathy Wood, Hester Peirce, and Chris Dixon talk about what's in store for this year, 2025, and beyond. We'll cover the explosion of real-world assets on-chain, the industry's physical infrastructure, the codependent relationship of crypto and AI, the continued growth of smart contract platforms, acceleration of institutional products. We've got it all. Mainnet's your opportunity to meet hundreds of projects shaping the future of crypto and the institutional investors and capital allocators helping to fuel their development. You can enjoy a 20% discount using discount code MSARIPOD when registering at mainnet.events. Interested in a prominent presence at this year's Mainnet? Snag a meeting room or a booth and contact events at Messari.io to explore all Mainnet has to offer.
Hey, Kunal, thanks for coming on.
Yes, Alkis, absolutely.
This is your opportunity to tell us any black magic that you've been using to figure out for the last 4 quarters Coinbase's earnings so accurately. So I just want to give you the chance to come clean on it now if you feel like you need to clear your conscience.
I wish, but this is fairly straightforward. I make my calculations very public. Anyone who has a Messari subscription can check for themselves, and it's all pretty in the open. So there isn't anything to reveal other than what I have already.
You've been so much more accurate ahead of the street the last, going back a year now, that sometimes it does feel like black magic. But yeah, all your methodology is up on Messari. The Excel file is up on Messari. Anyone can check it out. Have you actually done the math? Do you have a calculation of how much more accurate than general consensus you've been over the last year?
I think my last 4 estimates have been within 2 to 5% of the actual result. I would say that's pretty close. I've been surprised myself at how close it's been, but I just keep doing it, and it keeps working out. So I'm going to keep doing it.
Can you, for folks that maybe haven't heard this story before, can you explain your approach, your methodology, and sort of the origin story of this specific exercise?
Yes, absolutely. So the idea, the genesis comes from you. I think in your 2023 crypto outlook that you sort of saw that Uniswap volumes very closely were linked to Coinbase volumes for every day, every month. And we could be fairly certain of what Coinbase volumes are just by looking at, swap volumes. and that was the idea that on-chain data can inform Coinbase revenues pretty accurately. So that was the genesis of it. You asked one of the analysts. I was not the only trader analyst, but you asked the analyst to sort of look into this, and I was happy to. I think the first quarter I wasn't super right, but not like wrong either. But it's really set the methodology sort of going. So Coinbase has 4 major revenue heads. Trading volume is publicly known. They share it through their API. It's available on Messari, and it's very closely linked to Uniswap. So that we have a reasonable amount of, we have almost perfect information over. The other heads are the blockchain rewards, which is through their staking service, uh, stablecoin income, which is through earnings on USDC. So I'll get into how they exactly make this money later, but it's linked to the USDC supply. And there's like custody income, which is just fees on how many assets they custody for their clients. And then there are some smaller heads, but these are essentially the major heads. And there were enough sort of on-chain information, on-chain data available, and just using that, anyone can predict this. There are a couple of assumptions involved, and I suppose I've been more accurate with that. And that's largely because I'm a crypto participant myself. I see where the volumes are, and there are some things that I don't share in the report, which is how how I predict the split between retail and institutional volumes and such. But that's the broad methodology of it. I think other analysts have used similar methodologies as well after sort of we proved it, and they've come close as well. So there's no magic trick, and that's the entire point of the report, that blockchain makes this data very accessible. We don't have to necessarily wait for auditors, accountants, all of this. One, I like to say, is one crypto analyst sitting in India, maybe 10,000 miles away, can beat co-located Wall Street analysts. So that's the idea of it.
Yeah, you've obviously taken that initial nugget and then given us a whole life of its own, which has been great to see. So yeah, you alluded to this, but if you could, for those who maybe aren't obviously as close to Coinbase's revenue buckets as you are, walk through those 3 buckets as you described them, and just give us a sort of high-level breakdown to set the stage of exactly how Coinbase makes money.
Right. So Coinbase has it splits its revenue into 2 major buckets. One is transaction revenue, and the other is everything else. The transaction revenue is generated from its most important major business, which is the exchange business, and Coinbase charges a fee on every trade that's made in the exchange. That's how it generates transaction revenue. The fee on institutional versus retail volume is significantly different. So it's important to get that estimate right, but we'll get into that a little later. The other large bucket is the subscription and services revenue, and this includes everything else that Coinbase does. So Coinbase has ownership over, or partner ownership over, Circle, which owns the USDC stablecoin, which issues the USDC stablecoin. And the model there is that the USDC issued on chain does not necessarily generate a yield for its holders, but the dollars that Circle has off chain in its bank accounts, that it can invest in US treasuries. That's the most significant subscription and services revenue. The next most significant one is blockchain rewards. It's what Coinbase calls it. That's from its staking service. So all the users who have their ETH on Coinbase, or other proof of stake coins on Coinbase, they can choose to stake through Coinbase. Coinbase charges around 15 to 25%, depending on the customer, depending on the asset, and this generates their blockchain rewards revenue. Again, this information is available to us through on-chain data. We know how much ETH Coinbase has staked, and we're able to calculate this. The next major revenue head is custodial fees. So Coinbase charges custody from institutions who are holding their assets on Coinbase. This is typically will be a small percentage of the total value of the assets. If we have a historical indication of how many assets Coinbase holds, which it discloses every quarter, we can estimate what the flows may have been, and sort of using the historical fee rate, we can estimate what the historical fee will be. And then they have smaller heads. One is interest income and other subscription. I use largely historical data and how it may be correlated to either Bitcoin prices or custody fees, and just estimate that. So just using these heads and simple assumptions, we can arrive at the net revenue.
And strategically, and maybe some can infer this from the list that you just gave out, but strategically, Coinbase has been focused quite a bit over the last year or so on diversifying that revenue, with the obvious implications there being to be more resilient against swings in trading volume based on demand for crypto and development in the industry.
Yeah, so that's a great point. So Coinbase was primarily, like, all of its revenue was being driven by transaction revenue. Transaction revenue by nature is, I call it very fickle. It's not sticky at all. It fluctuates greatly with like crypto cycles. Crypto is deeply cyclical, so Coinbase had very highly sort of fluctuating revenue. Coinbase has worked very hard over the last crypto bear market, and its early investments have really paid off, that it has been able to create revenue which is not sticky. So a large part of its revenue now is generated from these subscriptions and services, which is not as correlated to swings in market sentiment and crypto prices. So that's like huge props to the Coinbase team, the leadership, the execution of it, all of it, to be able to diversify their revenue to such a great degree where it can generate revenue. It can be, I think their goal is to be EBITDA positive no matter what cycle crypto is in. So they've created these alternate revenue streams which are not as correlated, keeps them profitable even in down cycles, which is very rare for like a crypto company. So all the precedent. Just as like an example here of the Coinbase's excellent execution, in Q2 24, the total trading volume was quite similar to Q2 22. So in Q2 24, they had 219 billion of trading volume compared to Q2 22's 217 billion. The difference is irrelevant, but the difference in net revenue is of 500 million. So it's like it was 800 million in Q2 22. It's estimated to be 1,400 million, 1.4 billion in Q2 24, and the difference is significant here. Just on and this is all on the back of better execution. So they've created almost 450 million worth of subscription revenue, which they didn't have back in Q2 22, and just it's incredible execution. It's an incredible story that at the same volume numbers, they're 70% higher on net revenue.
Yeah, that's good context. We should also contextualize this in that while they have done an excellent job of strengthening their base with some less volatile revenue than the transaction revenue, that transaction volume has still shown significant growth over where it was a year ago. Both trading volume and trading volume and transaction revenue are both over double what they were in the same quarter a year ago. The headline number is down 14% overall, and a lot of it being driven by the transaction volume, or just relative to the previous quarter. We're still looking at a business that's growing quite rapidly when we zoom out.
Yeah, so the margins haven't really expanded too much from last year, but you're right that that transaction revenue is up, but that's largely because of trading volume being up as much as well. So trading volume, Q2 23 was a very quiet quarter for crypto, and Q2 24, we've had a bit of resurgence, a bit of like a bull market. So it's natural that those revenues are up as much. Coinbase has worked on improving its user mix. So it has reduced discounts to institutional traders. The retail traders as well, I think, have let me just check quickly. It has, yes, it has a bit lower actually take rates from last year, but that is understandable as users may be a little more sort of price sensitive now.
So that all makes sense as sort of actually, that's a good segue that you just made into some of the new products that they've been developing. Base, probably the most notable there. Looking forward, what are some of the things, where are some of the areas that you'd expect this revenue to grow most?
Yeah, so I think Coinbase is a deeply crypto native company, and they're building for a future that's dominated by crypto. So we were talking about cannibalization earlier, and whether other products can cannibalize, like on-chain products can cannibalize Coinbase's growth story. But I think Coinbase, like as a good company would, is cannibalizing itself. It already has multiple on-chain products that are maybe one of the best performing ones, right? So Base, one of the larger sell tools by user adoption. It has done excellently, has very high fees, is continuing to grow, and apparently started, like, it's largely managed by a very small team. So I think Coinbase, it always looks to like the future. They have amazing visibility through their ventures arms, through like just the the heritage of it, and so they're very well positioned to grow even if more like crypto moves on chain. They, obviously USDC is their on chain product. They recently launched like a Coinbase smart wallet, even portfolio management, the on chain portfolio management platform with this Coinbase wallets again. So I think Coinbase is very well positioned, no matter what, to grow their business, because they have just a great team with great leadership executing at a very high level. Another thing that I want to talk about is their custody business. So right now it's like a bit of it's a small revenue line item, but Coinbase is the preferred custodian for 8 of the 10 Bitcoin ETFs, including Grayscale, BlackRock, and ARK Invest. So I can imagine that as more crypto ETFs launch, the ETH ETF seems to be imminent. So Coinbase will play an important role there as well. So Coinbase has executed well to diversify its revenues and is also working on future-proofing it. They're not resting on their laurels and seem to be on a path for growth, no matter what the future holds.
So if anything is going to surprise you when Coinbase comes out with their official report on their earnings in a few weeks, where would it be?
Honestly, I don't know. I haven't been surprised. But I'm always like, it's always great to hear like their comments and where they think the product and crypto in general is heading. They have like a lot of visibility into on-chain products. They continue to launch like new exciting products. Like Base is one of the most amazing sort of like success stories in the Ethereum ecosystem. Farcaster on Base is also by Coinbase alum. There is there's just so much there to be like excited about and hear from Brian and their team. So it's hopefully I'm not too surprised on the numbers, but I'm happy to hear about what they're thinking, what they're seeing in the market in crypto.
Great job as usual, Kunal.
Yes, I do hope it is a great job when the results come out for it. Until then, thank you. This episode was produced by Steve Bichimer based on the report Spoiler Alert, Coinbase Q2 2024 Revenue Estimates, written for Messari Enterprise by me in July 2024. To read more about Coinbase, please consider subscribing to Messari Pro at messari.io.